setup looking like, and what to make of the global tariff trade war that we are seeing. To discuss exactly this, we are now joined by Mr. Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Peter, morning, and thanks so much for taking your time out and joining us here on ET Now. What do you make of the latest announcement that has come in from Trump, where he has extended the deadline to impose additional tariffs on China by 90 days? What does this mean for other economies, especially India, say, where additional tariffs have been levied?
Well, it basically puts everything back on hold. So it gives the markets more time to assess what may not happen with China and India as well. So it's Trump flipping again, and that is an indication that China is a tough hand to deal with. And so in one respect, that's good news. And in another respect, it's not, because we really don't know how this is going to end up. But obviously, the markets are beginning to realize that every time Trump blinks or changes his mind, that it just puts one more big question mark. So I think in terms of the market today, I don't think it's going to have much of an effect. The major focus will be on the inflation data.
That's right. Hi, Peter. This is Kanishka also joining in. You were just mentioning that the major focus is going to be on the inflation data that's due later today for the U.S. markets. But, earlier you have mentioned that even a baseline tariff of 10 to 15%, that would be inflationary for the U.S. But now those tariffs, nearly 40% of tariffs for some countries, they have come into play. So how do you see all of this panning out, especially for the U.S. consumer? Because that's the one now who's going to pay more, if higher import duties are imposed.
Absolutely. Even if you get a baseline of 10 plus on inflation, which so far it's been at 15%, but let's assume you say the average will be somewhere between 10 and 15. That's inflationary. It's not going to send inflation through the roof, but it is inflationary. And I think, once again, we're going to see that in today's numbers. We are expecting that top line inflation increases by 0.3%. And the key here will be core inflation, which we're looking for a hike of 0.3%. And of course, on a year-to-yearly basis, it's very possible that we can see inflation tick back up to 3% on a core rate. So that just will give us more confirmation, that tariffs eventually are going to keep inflation elevated, and that the American consumer is the one who's going to pay the price.
American consumer who is going to pay the price, that's the word coming in. But Peter, since we are talking about inflation, in this backdrop, if you can tell us, what are you expecting from Federal Reserve in its meeting in September? There are hopes that perhaps Fed could cut rates as much as 2 rate cuts for the rest of this calendar year. What are your estimates when it comes to Federal Reserve move?
I think we will get rate cuts. There's I don't think there's any doubt about that. The economy is slowed, and it's slowing somewhat rapidly. And we saw that with the employment numbers. Of course, it's not a good combination to see the economy slow and inflation go higher. That's obviously signs of stagflation. But I think that they will move. And I think that, of course, we'll probably get some sort of, I don't want to say confirmation, but certainly insights of that during the August 21st, 23rd Jackson Hole meeting. So I think, there's a good chance, a very good chance, that if the September labor markets come in much weaker, or should actually show negative jobs growth, that the Fed may be forced to cut by 50 basis points. And that would be the two, instead of cutting it 25 and 25, you probably get one big 50 basis point move, and that probably would satisfy it for the remainder of the year. But of course, there's another problem here. And the problem is, do the markets really trust the macro data?
That's right. Thank you so much, Peter, for taking us through what to expect from the Federal Reserve when it comes to rate cuts going forward in the year. On that note, we'll let you go. It was great chatting with you. Thank you for taking us through what these tariffs mean for the rest of the world. Well, let's shift focus back to Indian markets again, and let's go